Bryce, let me turn to you, bring you in, and ask you about this issue with guidance, which we basically don't really have any. I mean, it's true that makes it difficult to get that clarity on the next quarter, but I don't know. Is it just we know from Nike earnings, from so many other results, that earnings are going to be all over the map. So does that make it more difficult for you, or does this just par for the course?
Well, I think it creates opportunity, because when there's the most amount of uncertainty is when there's the most potential growth in a stock price or in a corporate bond. So on one hand, it makes it very, very difficult. It adds a lot of volatility to your investing experience, and maybe overall in your portfolio, you want to dial back the risk. But when there's maximum uncertainty, a total lack of visibility, that's when you probably should be buying. So we're firmly in the camp of buying on dips. We like the airline trade. We also like a basket of REITs, diversified amount of REITs, because whether it's rental property or warehouse property or what, it seems like people are assuming the worst when there's no clarity at all. And so that's the time to kind of try and be an opportunistic investor, we think.
No, I take your point that, when you have that confusion, it does create opportunities. But how do you know you're not going to get burned? I mean, of course, this could turn out much better than people are expecting. But I go back to Buffett and selling out of the airlines, and, knowing with some of those balance sheets, it's going to be a really tough slog.
Well, we think there's a huge amount of pent-up demand. You saw the housing data this morning look good. We think consumers are chomping at the bit to spend. I think your observation about what's going on at the malls is there. So all of that does lend us a little bit of comfort that we won't get burned. You could, and there will be areas where you do. You have to have a little bit of the law of large numbers on your side, knowing that you're going to have a lot more winners than losers. But we still are thinking that there's just a huge amount of savings that has been retained by consumers, and they're itching to spend it. So I don't know if there's going to be a big surge in economic activity in the fourth quarter of this year or the first quarter of next year, but it's coming. So you're going to take some hits along the way. I always think of it as hitting some air pockets and on the stock market. But when you look out 6-9 months, yeah, I think it's going to be pretty positive.
Let me finish with you, Kim, going back to this whole idea, which we know is true, of course, with the market, that good news, helps equities, bad news, we see sell-offs. We could be in this environment for a long time. I mean, I guess until there's some breakthrough on the vaccine, full stop, we're going to be in these cycles. So are you opportunistic about that?
I am, but I'm also playing longer-term themes. I agree with the other guests that not everything is going to collapse, that's for sure. But I do think that there will be losers here, and I want to stay as far away from those as I can. So what I'm doing is trying to imagine how the world is going to change. And I do believe that even when we get back to whatever a new normal is, it is going to be a new normal. And an easy place is work from home. I think a lot of people really like the flexibility of it. And I think a lot of companies are looking into this. So commercial real estate might be one of the biggest losers of COVID. And I think that you have to think like that, really think long and deeply about what areas are going to decline and what are going to persist. And that's where you have to put your money, is the places where you have a pretty good idea that people are always going to want that good or service.
All right, fair enough. It's, again, good to have you both here today, Kim Forrest and Bryce Doty.
Thank you.
Thank you.